And we're live. Welcome back to Macro Shock, the show where we cut through the noise and give you the actionable insights you need to navigate these turbulent markets. I'm Dave, and folks, we have a major macro event unfolding in Japan that's sending ripples across the globe, impacting everything from your portfolio to the cost of your morning coffee. Are you ready for another shakeup? Because the Japanese yen just took a dive, and the implications for global markets, including your hard-earned investments, could be absolutely massive. What does a weaker yen mean for your portfolio? And are we on the brink of a new era of fiscal expansion that could send asset prices soaring or create unforeseen instability? Let's dive in. Just this weekend, news broke that Sanae Takaichi secured a victory in Japan's ruling Liberal Democratic Party (LDP) leadership election, positioning her to potentially become Japan's first female prime minister. This political shift immediately triggered a significant reaction in the currency markets. The Japanese yen, JPY, sank sharply against major currencies, experiencing its biggest one-day slide against the US dollar since May, wiping out recent gains. On Monday, October 6, 2025, the yen touched its lowest point against the US dollar since early August. Mainstream media outlets like FX Street are reporting that Takaichi is widely viewed as a fiscal dove, a proponent of big government spending and loose monetary policy. Her win has sparked expectations of further fiscal easing in Japan and, crucially, has tempered, meaning reduced, bets for an imminent Bank of Japan (BOJ) interest rate hike, which some had anticipated as early as this month. This effectively suggests the BOJ might be compelled to maintain its ultra-accommodative stance for longer than previously expected, despite some underlying data that might support a possible, more hawkish position. This isn't just about Japan. The implications of a dovish BOJ and aggressive fiscal spending in the world's third-largest economy reverberate globally. Let's break down a few potential scenarios. A. Scenario 1. Prolonged Japanese fiscal easing and dovish BOJ. 60% probability. Takaichi's established stance as a fiscal dove and her immediate impact on market expectations for BOJ policy make this the most probable path. The LDP leadership win gives her a strong mandate to influence monetary policy. Impact analysis. Initially, this could fuel a risk-on environment. Continued ultra-loose monetary policy from Japan effectively adds more global liquidity, potentially boosting asset prices worldwide. Low global interest rates generally support higher equity valuations, especially for growth stocks. However, persistent yen weakness could also lead to global trade imbalances and potentially import-driven inflation in Japan, which might eventually cause broader market instability if not managed carefully. Specific market sectors. Technology, NASDAQ, will likely continue to benefit. Lower interest rates generally reduce the discount rate on future earnings, making tech and growth stocks more attractive. Companies like Microsoft, MSFT, and Nvidia, with their global reach, could see continued tailwinds from sustained global liquidity, though currency translation effects could be a minor headwind for yen-denominated earnings when converted back to dollars. Financials. Japanese financial institutions might struggle with compressed net interest margins if rates remain near zero for an extended period. Global financials like JP Morgan Chase could see mixed effects. Increased market activity from liquidity, but potential headwinds if global growth is questioned by growing imbalances. Export industrials autos. Japanese exporters, such as Toyota, TM, will directly benefit as a weaker yen makes their products cheaper and more competitive internationally, improving their profitability. Key insight. This scenario suggests a continued chase for yield and growth, but with an underlying current of potential long-term inflationary pressures and trade friction. Scenario 2, BOJ surprises with a hawkish stance, 25% probability. While Takaichi's win tempers rate hike bets, the BOJ is not entirely immune to economic realities like rising inflation or global central bank actions. They might still prioritize price stability if data forces their hand, going against political pressure. Impact analysis. A sudden, unexpected BOJ rate hike would send shockwaves through global markets, likely triggering a risk-off move. Global equities could experience a sharp correction as tighter monetary policy in Japan reduces global liquidity and potentially strengthens the yen, impacting carry trades. Specific market sectors. Technology. Highly sensitive to interest rates, a hawkish BOJ could lead to a significant sell-off in high-growth tech stocks as valuations are reevaluated. Companies like Tesla, TSLA, with its growth-dependent valuation, could be particularly vulnerable. Financials could see an initial positive reaction from steeper yield curves, but this would quickly be overshadowed by broader market instability. Key insight. This is the tail risk scenario that could unwind the liquidity trade and cause significant volatility. Scenario 3, global currency wars and trade imbalances worsen, 15% probability. If the yen weakens excessively and rapidly, other nations might perceive it as a competitive devaluation, leading to retaliatory currency or trade measures. The potential for such actions increases with prolonged and significant currency depreciation. This would be highly detrimental, leading to widespread uncertainty, reduced global trade, and a significant economic slowdown. Equities worldwide would suffer substantial declines. Specific market sectors. Industrials and materials. Sectors heavily reliant on global trade and supply chains, like Caterpillar, CAT, would be hit hard by increased tariffs, disrupted supply chains, and reduced demand. Consumer discretionary. Reduced global income and consumer confidence from trade wars would significantly impact consumer spending, hurting companies like Nike, NKE. This is a low-probability, high-impact event that represents a severe breakdown in global economic cooperation. So, what am I doing with all this? Given the current landscape, especially the implications of a weaker yen and prolonged Japanese easing, I'm leaning towards a cautious hold, with an eye on potential profit-taking in overextended areas. While the global liquidity argument provides a bullish undercurrent, the topping tail on the SPY chart suggests we might be due for a breather. Let's look at the SPY technical analysis that's so crucial right now. The SPY has been in a clear uptrend, recently breaking out of a 660 to 666 consolidation range. That's bullish action, no doubt. However, the last candle on the chart is a topping tail, which is a warning sign, indicating that a pullback is possible. This aligns with my cautious sentiment. Now for the critical levels. As long as the SPY price holds above 627, the direction is still up, with a target of 680. That 627 level is absolutely paramount, folks. It's our line in the sand. If we see price action firmly above 627, the underlying uptrend remains intact, and 680 becomes the next logical target. But if 627 breaks, that topping tail will have played out, and we could be looking at a deeper correction. I'm watching this level like a hawk. What do you think about Takaichi's win and the sinking yen? Are you betting on prolonged easing or a BOJ surprise? Let me know your thoughts and your positions in the comments below. And if you're getting value from this analysis, hit that subscribe button and ring the notification bell so you don't miss our next macro shock. Remember, this is not financial advice, just my analysis. Always do your own thorough research and consult with a qualified financial advisor before making any investment decisions. Markets are dynamic, and past performance is not indicative of future results.